Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we're asking ourselves what happened today and what does it tell us about the coming ones. Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reach up in the right-hand corner. Subscribe's free, easy. It's a good way to keep up with what's going on. And as we know, there's lots going on here. If we look at the indexes, you actually started to get the turn today. It's tenuous, but it is identifiable. We'll look at the charts, but you can see a little bit of green coming in on the U.S. markets. Here tonight, Hong Kong getting a bounce. Same thing in China, very slightly in China. You had the DAX, the CACs down again today. Those look like they could go lower. We'll try to take a look at those charts. Commodities down pretty much across the board. The big loser one more time here, oil. This thing is just rocking. West Texas Intermediate about 31 bucks a barrel at this point. So let's move to the charts and see what we got. We'll start here with the S&P 500. And if we look at the S&P 500, you get an under back over, slightly less volume, kind of a doji, looks like a turn to me. It's going to try to get a turn. You know, if we pull it over and look at the weekly, which we did last night, you can see that, you know, you have this here, but you're in the middle of nowhere. And if you're looking at the market from a range perspective, your ranges are here. It's going to drawn in. So you've got the top of this bar. It's right into this price point here. So you kind of had the range up top. You got the one underneath, right? These are the two ranges we've been watching. This was the battleground. It gave it up. It gave it up with a big volume spurt to the downside. This is where you have to look for the bounce on the way back up. The bounce actually is going to come back into this area most likely when it takes place. And that bounce, you know, it's a pretty good bounce. We're talking about 13. Let's get the bottom of this number. 19, not 13. 1972 is the bottom, and we're sitting at 1923. So, you know, you could bounce 50 points, and it'd be nothing more than just a simple bounce. If we move over and take a look at the rest of these, the Dow Jones did the same thing as the S&P, the NASDAQ. Now, this was a close one. 46.37.85 was a low on Friday. 46.37.99 is where it closed. So you closed just over it. You do have a little bit more volume. So this one's a mixed signal at best. So you do it on price, but you don't do it on volume. That means you can try and test a little bit more. If you look at the NDX, you actually have the same picture here, although it's a cleaner reversal with a little bit more volume. It's a kind of a hammer reversal. That one looks like it probably is going to try to go higher. If you look at the Russell couldn't do it. Less volume, but couldn't get higher price. Now the Russell, if you go over to the monthly chart, the Russell is testing into this high volume low on the monthly. That's 1040.47. You got under it today. You're back over it. Let me see. We're doing 2.6, and we got about, we're probably going to do about 9, it looks like, which is going to be just slightly less volume. So right now, at least the Russell is respecting that price zone. You know, when the market goes up, you see, you know, a continual kind of a stair-stepping on the way higher. When the market's doing that, right, kind of a bull market, you get this little stuff going on. And what's happening is there's rotation going on during this process. Well, when you're going down, you got rotation as well, just in a different form. Here's the biotechs. Biotechs just shot today. The low it was going into over here on the daily was 295.10. Closes at 291, so it's underneath, breaks another swing point. And on the lows, it wants to go after. That low was 285.53. It gets down to 285.03 on the weekly. And right now, not doing the volume. Looks like it's going to try to claw out one more bottom here, test and probably hold, given the volume tells so far. But you could see where the damage was today. You also had semiconductors down today, but they actually recovered. You got an under over. They look like they want to go higher. As we saw, the oil market was getting racked. Oil stocks doing the same. Here's the XLE, the integrated oils. They're going down after the lows from 2011, folks. 54.26 is that low, and you're trading within 1% of it now, just slightly over it, 56.05. Technology was the winner today. Technology was a nice little doji turnaround, a little bit more volume, actually almost the same. 19, just slightly less volume, so that's an under-over. Industrials actually did the same under-over, but had a little bit more volume, and the financials had the under-over. Now, the financials are reporting the end of this week. We had Alcoa tonight. Alcoa was up slightly after the bell, but the real story here is going to be Wednesday, Thursday, Friday with the financials reporting. That's the main story this week as the earnings start to spill out. Healthcare, of course, down in sympathy with the biotechs, and the healthcare test into that low, a little less volume, under, back, over. Also looks like it's going to try to flip around as well. I'm going to move over to OX markets. And in particular, I'm going to move over and take a look at the dollar, because the currencies have been what's racking things. And if I look at the currencies and I look at the dollar started to head back up. And remember, we're still playing inside that big Draghi bar. And so this range here continues to hold. And as long as that holds, we're not going to get huge moves or secondary moves in other markets as a result of this. The markets we're getting the moves in now are the commodities, in particular the oil. If we move to the oil market, you can see here just another drive to lower and lower prices in this market. And as I said, West Texas Intermediate sitting at about 31 tonight. Over in the emerging markets, we actually had an under-over that had less volume. Closed at the same price as Friday. That looks like that's trying to claw out some sort of a bottom. And I'll just might as well use this chart to show it. But what you're going to want to watch on the way back are the retest regenerates that are bearish, right, as this thing comes back up. Because if this wants to go down farther, right, this bearish retest regen, right, this guy is going to create another move back down on the test back up. And so what you typically look for is you come back up and roll it back over and go down again. And that's how you measure how it comes back, to give you some sort of an indication of what is to follow. Gold market down a little bit today, but actually gold held in pretty well. I was kind of surprised at how well it held. It's coming back, just like we were just talking about the bearish retest regenerates. Well, you have the opposite going on with gold. Gold breaks 3 swing points on the dailies. It's coming back into test. And if you look, and that's a bullish retest, and because it's coming back within 6 bars, it can get deeper. If we look at it on a weekly basis, you can see here on the weekly, that retest regen bearish, right, only gets up to test a full retest, doesn't have the volume, trying to roll back over. So gold not indicating, at least not yet, that it's going higher, which also indicates that the fear may be subsiding in the equity markets. And when I look at bonds, I see the same thing. And when I look at the junk bonds, yes, there was some weakness there, but I did not see these in any way, at least not yet, reflect the damage that's being done over in the oil market, which is what drove this big move the last time on the way down. So, you know, when I'm looking at this, I'm seeing sideways action versus huge spikes down. Of course, you know, when you're thinking about it and you're adhering to the true neoclassical, what it says is when you come into these lows, you want to measure the volume there. We're not there yet. We did get one test here, the bounce off of it. Now we're drifting back in for the second test. If it holds, if it has less volume on this test when it comes compared to what it had here, this is probably over for now on the downside. So that's a look at where we're at tonight in terms of where we're going. Well, let's take a look at the overseas markets, and let me pop in to Asia, because that's where the real damage is taking place right now. Here's the Hong Kong market. Hong Kong just totally falling out of bed, right? Breaking a swing point low, and it breaks it on the daily, and it's trying to break it on the weekly. Yeah, last week didn't quite do it, is doing it today. It's underneath that August low. And if you go to the monthly, right, as this comes down, it's already broken here. That was back about 3-4 months ago. The test now is the next low, which is the June 2013 low. That sits at about 19.425. You got about 400 points to go to get to that price point. If we look at Shanghai, which is really been volatile, you had the closure on this day where you had no volume. You get a reversal last night, just continues to claw lower. Another 5% down last night. If you pull this back, it's coming back to test these lows at 28.51. And so Asia's still not showing any signs of reversal, any signs of strength. As Asia goes, so goes the pressure on equities worldwide, because everybody's eyes are on these markets, in particular the European eyes, because if you look at the export picture and who imports, who exports, Germany's the one that's exporting. They're getting hit, and they're getting hit hard. So they've broken a swing point low here. They're coming back in to try and test into those August lows. They're not that far away. It's what do we got here, 9.8 versus about 9.3, so you're about 500 more points away, another 4% or so. This is the market that just can't seem to find a low right now. You've got an ABCD structure. It's not quite done, and I'm looking at it here on the weekly. You got to bounce off of it, right? The next move down is going to take you down into about this price point, which is to test these lows. And so looks like Germany tries to go lower. Looks like at least in Asia, we don't have a bottom or anything definable like we had here today. So you've got pressure overseas. You've got a mixed picture here saying that we could get a little bit of a bounce. What's the deal? Well, you've had 7 days down. As a matter of fact, if we go back to the boards and pull up the S&P 500 again, you've actually had about 8 straight days. 1, 2, 3, 4, 5, 6, 7. Yeah, this is the 8th day on down move. That's stretched, right? You've already had a huge pullback from 2081 down to 1901. So you've had 180 points off the top 8 days. That's fast, heavy movement in a short period of time. Says you're going to get a bounce. You've got the formation here. You just need some help from overseas. Will we get it from overseas? There's nothing there that tells us we will. Looking at the U.S. markets, for some reason, it looks like it's probably going to try and happen. That's it for tonight. I'm going to leave it at that. Thanks for joining me. And as always, I ask you to tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night, and I'll see you next time. Good night.